Hey there, YouTube family. Stocks with Josh show. Happy Saturday to you guys. I hope your weekend is going well. Check in the comment section. Hit the like for me. I've time-stamped this video for your guys' convenience. Today, I'm talking all things Meta, Mark Zuckerberg, old Facebook. Is this a buy or is this an absolute hard sell? Well, we've seen this last week that after their Q3 earnings, the stock fell 25%. And that is that the stock is currently now down 71% year to date. All of this began when Facebook changed its name to Meta, and since then it's come down 67%. I'm going to review the fundamentals. I'm going to give you guys my technicals, and I'm going to give you guys my game plan. Before we do, let's check out this clip.
Yo, my man is getting smoked, family. Could we get some tears in the chat? This man is dang near on food stamps by now, family. Let me tell you, let me read this from investing.com. It says, Mark Zuckerberg, the CEO of Facebook, now known as Meta, his wealth has shrunk by $100 billion from its peak 1 year ago, meaning this is the biggest wealth loss by any one person in history. Could we get some tears in the chat? Could we get some prayer hands in the chat, family?
Keenan Grace is absolutely one of my favorite YouTubers. I had a chance to hang out with him at the FinCon conference in September. Keenan is a smart guy. He's inspirational, very funny. So as Keenan says, Mark Zuckerberg's personal wealth has shrunk by over $100 billion. Fam, I don't care how much money you've lost. None of us have lost as much money as poor old Mark Zuckerberg. I want you now to check out this clip.
To Fast Money, Meta just melting down today, losing a quarter of its value. The company has now lost $800 billion in market cap in just over a year. That is more than the value of Tesla. That drop in part because Mark Zuckerberg is sticking to his guns. Remember, he changed the name of the company to Meta as he pivoted the social media giant to the still non-existent metaverse. This despite the challenging ad and economic environment. And he's sticking by the spend on metaverse, even though the return on that spend hasn't been paying off so far. Listen to what our own Jim Cramer had to say about Facebook this morning.
I made a mistake here. I was wrong. I trusted this management team that was ill-advised. Hubris here is extraordinary, and I apologize.
Good old Jim Cramer crying on CNBC. You guys may know that there is an inverse ETF that buys everything Jim's selling and sells everything that Jim's buying. It's already enjoying double-digit profits. Now, I'm not here to hate on Jim Cramer. That's not what I'm about. But what I'm going to say is this, that when I saw him crying on CNBC, it actually dawned on me that perhaps it might be time to look at Meta. Jim's tears may have signaled a bottom for Meta. Can we do the opposite of what he's recommending and make some money? Well, to even consider it, we have to look at the fundamental economics. Meta Platform's PE ratio as of October 27th, 2022 has hit 12.38, compared to the average S&P 500 company of 25. Now, that 25 number is approximately 30% above the historical average S&P PE ratio of 19.6. So even from the perspective of the average S&P reading of 19.6, Meta is cheap compared to other S&P 500 companies. Meta has an enterprise value of only $228 billion. And remember we talked about Google had an enterprise value of $1.2 trillion and Apple had an enterprise value of $2.4 trillion. So for perspective on comparative value, Meta has come down really far. So the key takeaway from the Q3 earnings was that their operating cost and their expenses rose by 19%. That gave them a $22 billion spend in the last quarter. And capital expenses rose by 10% to $9.5 billion. This basically tanked their free cash flow to only $173 million. What's amazing about that is we're talking about a company that touches over 3 billion daily users and only made in the last quarter less than 200 million. And the story that it tells is that these guys are spending way too much money. So while they're simultaneously making less money, less revenues, as the revenues are shrinking, they've been on a spending spree. It was also revealed by the CFO on the earnings call that their increase in capital expenditures was largely also going to AI, artificial intelligence. They were put in a very big pinch by when Apple began to block their ability to access their users' data. So this is their response. They're trying to build an AI that can begin to enable them to do targeted advertising to their customers so they can try to get ahead of some pretty steep competition right now, like TikTok. The big picture is that Meta has been knocked down, but the big question is, are they entirely out of the fight? You got to remember, these guys have 2.9 billion users daily, and they are just now starting to look at monetizing the WhatsApp. I bought Facebook back when it was between $15 and $30 back in the day, and at that time, they had no ad revenue. And the big conversations on CNBC was, can these guys even make this profitable? Well, I do believe, to their credit, Facebook absolutely proved that they could build a company that was very profitable around ad revenue. And I think that that points to the fact that they are likely going to succeed in doing the exact same thing with WhatsApp. So Meta is held by a lot of institutional investors. If you guys want to see who exactly owns Meta and at what percentage, you can find that out on the MooMoo app under the Market tab by selecting the Shareholding button. You basically search Meta, and then you click the detail, and it will show you that the number one holder is indeed Mark Zuckerberg. He is holding 13% of the company. And then you got all the usual suspects like Vanguard, BlackRock with 7 and 6% respectively. And what that simply tells you is that Wall Street is still very interested in this company and they still have a stake in its success. If you guys don't have the MooMoo app, you guys can join my community over on MooMoo by clicking the link in the top pinned comment. Their best limited time offer to open and fund an account is right now. They're giving away 15 stock, potentially valued up to $30,000. But if you just put in $1, you get one stock, potentially valued at $2,000, and a fresh Alexander Hamilton. Or if you choose to put in $100, you can get 6 chances at stock valued at $2,000 each. These guys have commission-free trading, a full 16-hour trade day. They've got 8 order types. They've got all of the stop losses, trailing stop losses that you need to protect your money. But most importantly, they've got the Stocks with Josh community page. You guys can click the link and come find me over there and join my family. All right, let's take a look at the charts to see what the story is telling us there. We're going to start off with a weekly candlestick view, which means that each candlestick represents an entire week in the market. That gives us a very, very long view. And the very first thing that we see is that this price has come down all the way to the 2015, 2016 levels. This thing has jumped into a time machine and it's almost lost an entire decade. Number 2 thing that we're going to point out is bullish divergence on the RSI. The RSI does not tell you when a reversal can happen because stocks can stay in the overbought or oversold territory for a very long amount of time. But when you see divergence, bullish divergence, it tells you that there is increasing momentum for a reversal. And the number 1 thing I want you guys to see is that the next layer of support, as determined by the shelf of volume support, is down at $80 and even slightly above, up at $85, with the principal ideal support being at $80 ultimately for Meta. But the resistance above is really at, there's some at 125, but max resistance would be up at 155. That's where you've got a lot of bag holders. So technically the opportunity above right now on Meta is greater than the risk below. There's more room for it to go up than there is actually room for it to go down. $80 is a key support, 155 is a key resistance. So where does that leave us? Right now, Meta's price has got to go down because the earnings are dropping. And of course, Mark Zuckerberg is spending like a madman in a recession while the company is making less money. Some of it is by necessity, some of that spending is by design. The market right now has perceived a lack of discipline and cost control as the number 1 problem with Meta. And here's what I think the opportunity is. If he simply stops increasing his spending, because that's what he's been doing, each quarter he's spent more and more. So if he simply spends a little bit less next quarter, I believe that Wall Street will absolutely interpret that as that he is either succeeding at his mission or he's becoming more practical and calming down his metaverse mania. All that I see right now, because I believe that the downward trend is the trend. It's a bearish trend. But the opportunity that I see is a classic dead cat bounce. When you see a 25% move down like that, it's got to get your attention. I believe that we could get a retracement on that move back to the 115 level. We have beat down cheap options right now because of this long history of it keep moving down, and we could possibly even go as high as 124. And that's assuming that the markets remain bullish between now and mid-November. Don't forget that the shorters have been betting heavily that this thing is just going to fall. And when the shorters and the bears linger too long around a trade, and right now it looks like they've been lingering hard around Meta, we know the old saying that bears make money, bulls make money, hogs get slaughtered. And it's possible that these guys have gotten too bearish, they're lingering too long, and some of them are going to end up getting slaughtered. It would take very little if these guys don't take profit soon for them to experience a short squeeze, which would easily get us up $15, maybe $25. My basic game plan is this, and it's a little bit of an experiment. I'm going to buy a single option on Meta Monday morning, and then I'm going to add one every single day if we continue to hold this level and slightly move up. I'll keep you guys posted on my progress. My get out price is 97. If the stock price breaks below $97, I'm going to get out. This is a very cautious dead cat bounce play. You guys know I'm not greedy. If I get even a 10% win, 10, 20%, 30%, I'll take it and be happy with it. As always, thank you guys for joining me. Check to see if you guys are subscribed. Select the notification bell to get the updates on this meta play and see how it turns out. This is not a suggestion for you guys to buy, sell, or hold. As always, enjoy your guys' weekend. Peace and blessings, my friends. I'll see you tomorrow.